you run a business in China or you're thinking about it, this is the number you need to understand before anything else. Because most international companies don't fall in China because of strategy. They fall because of compliance they didn't see coming. Hi, I'm Mary from Out of China. We've been in China business services space since 1997. Today, let's start with the basics. What your WFOE is actually required to do, and where most companies get it wrong. Every WFOE in China has 4 recurring compliance obligations, each with a hard deadline. Number 1, the value-added tax filing. It's due every month. Miss one and you're facing financial penalties and damage to your tax credit rating. And number 2, the individual income tax declarations. The payroll tax is also due monthly. If you have employees in China, every single one of them is affected. And number 3, the annual corporate income tax settlement, which is called 汇算清缴 in Chinese. And it's due by May 31st each year. And this is the filing that receives the most scrutiny from the tax bureau. Errors here carry the greatest risk of back tax assessment and interest charges and follow-up audits. And number 4, the annual report filed with the market regulator. And the filing directly determines your company's national credit rating in China. And miss it and your company gets placed on a public abnormal operations list, blocking license renewals, bank account access, and more. Most local accounting firms in China are set up to serve domestic businesses, which means records only in Chinese. And that leaves your CFO in Frankfurt or your auditors in Singapore completely unable to review your financials. When something goes wrong, you are the last to find out. Think of it this way. Your CFO in Germany opens the quarterly report and reads it in English. And your accountant in Shenzhen submits it to the tax bureau in Chinese. And same document, same data, no translation delays. And that's what bilingual accounting actually looks like in practice. And most local firms simply don't offer it. There's one risk we see over and over again, and almost nobody talks about it. A financial manager resigns, and the replacement arrives 2 months later. And in between, the filing lapses and the new hire walks into a backlog, not a clean handover. When you work with an outsourced accounting partner, the risk disappears entirely. Filings stay on schedule regardless of internal staff changes, and your new hire walks into a structured, fully auditable system. At Out of China, every report and every filing is prepared in both English and Chinese from the start. So your local team has what they need for the tax bureau, and your headquarters get a clear picture they can actually act on. If this sounds like your situation, we'd be glad to talk. Visit outofchina.com or click the link below to get in touch. No pressure, just an honest conversation. So if this video was useful, give it a like and subscribe for more practical content on doing business in China. Thanks for watching.